Okay, so this is a good example again of a lone wolf because it was sells before and then it was sells after again. And then you can see that sells really started picking up again. So those are examples of what I call lone wolf. Basically what it is in a nutshell, the concept is it's a short-term retracement against the more macro trend. So again, it can be from the downside and it should be a short-term it could be alongside trade. Let's see if we can get back here. There we go. Where the market's been moving up, has a short-term pullback that starts to go ahead and fire off one or two sell signals there, and then goes back in the direction of the uptrend. The key is to get that 5-minute chart and that hourly chart both sharing those signals together. And so basically it becomes then a trend continuation. The 5-minute is basically having a short-term pullback that's deep enough just to start triggering sell signals, and then immediately goes back in the direction of the predominant trend. Okay, just enough to stop people out, get people out of those trades that went into longs a little bit early, stops them out, and then goes right back in the direction of the trade. All right, that's the key takeaway from the lone wolf type setup. Okay, and like I said, as we know, last Thursday and Friday we had a lot of chop. And so, and that's why we stayed out of trade, as we know here, for just that reason. So but that's all right. At least we want to kind of walk through the examples the best we can. Now, and also we were able to find pretty good examples on. Let's talk about go with. Well, you know what? Maybe we shouldn't talk about go with trades here because that's more aggressive versus conservative. So I think I'll save the go with trades for the next section. Okay. From a theme perspective, tone, lock, fire, and you can see here we're having a real tough time today, aren't we? Getting much in the way of tone and lock, especially on the lower time frames. It's really very choppy. Well, what's that representative of? A choppy market. And Tim, I know you're saying yep because you're the one who's been commenting. Your last comment above that was Chop City. So, that's what we're dealing with today. And so we're not getting a lot of tone and lock there. Okay. Yeah, exactly. Real world as it is today. And the let's go with the key reversals, Joseph. Let's talk about those. All right. So key reversals, when done properly, especially near the beginning of a trend, can be a very fruitful opportunity. What I'm looking for there, okay, is I'm looking for good tone and lock. All right. Now this is a 60-minute chart. It does not this particular trade is not dependent solely on the higher time frame. So in other words, if I've got good tone and lock on a 5-minute chart, okay, and then I get a good trading key reversal up, it's independent of the higher time frames, albeit that it is much better off if the higher time frames agree. Okay, so in other words, if the trend is down, and I get like right here, this is a key reversal down here. You can see that. Let's expand it so you guys can really see it. Right there, the high of this bar. Okay, we can see in the background here, it's basically mostly sells, and we already know that the hourly was mostly sells too, don't we? Well, they all were. They were sells. But now, so let's break it down to a 5-minute chart. The high of this bar is higher than the previous bar, and the close of this bar is below the low and the close of this bar. This is a full-blown key reversal down. This isn't even just a trading key reversal down, Joseph. This is a full-blown key reversal down. Now, and you see what happened here. Okay, so the trend is down on both the hourly and the 5-minute charts. Let me highlight this again. Right here. The high of this bar is higher than the previous bar. The close of this bar is below both the low and the close of this bar. That's a full-blown key reversal down. What's the difference? Well, this is a Rob Hoffman trading key reversal down here. Again, we see cells in the background on the 5-minute charts. That also happens to be in the hourly charts. The tone was to the downside. Okay, this went ahead. The high of this bar is higher than the previous bar, but the close is below the close, but not the low of the previous bar. Okay, this is a trading key reversal down. Now, did it also work? Sure it did. The difference is that you're being more aggressive on this key reversal. The Rob trading key reversal down is more aggressive than a full-blown key reversal down. How so? Well, this close right here is below the close and the low. So it really took out a lot out of the, it just completely vaporized that last bar in the direction of the predominant trend, which was, we could see with the indicators just on the 5 minutes alone, let alone the hourly charts, which we know we have the tone in that to the downside. Okay, so a trading key reversal down, I do not like to go ahead and use them against the trend. So in other words, if this market were, all, buy side back here, okay, if it were all buy side back here, and then all of a sudden I get a key reversal down, I'm not interested in that. Okay, I'm not interested in that. But if it's a key reversal back in the direction of the trend, just as this is right here, that's something I'm interested in. Okay, or this one, back in the direction, key reversal down, back in the direction of the trend. Everybody with me there? Mark, the entry on a key reversal down is typically, because if you're doing it with the trend, that entry is usually going to go ahead and be at the close of the bar of the key reversal bar. So once that bar is closed, then you can identify, you see, oh, yep, the high was higher than the previous bar. The close is below the close of the previous bar, and yep, it's a key reversal down, and guess what? The hourly chart's down, the 5-minute chart's down. Okay, it's in the direction of the trend. So a short side trade at the close of this bar is usually where I'm looking for that. Okay. From my perspective, I think it's actually more conservative, Mark, the entry if done below the 20 period. If it's down, okay, if the market's going down, then a key reversal down below the 20 period moving average. So an entry down here below the key reversal in the direction of the trend is really, in my mind, more conservative than a key reversal where you're actually slightly above speed lines and a 20 period moving average. This one is actually more aggressive. Why? Well, because what happens if this if this just so happens to be a short-term reversal back up where it's going up even further? Okay, it's potential that it could be. Whereas this one went and completely vaporized this bar that was above the 20 period moving average, completely took it out, took out its low, and it closed back down below the 20 in the direction of the trend. And you can see also this one had rapid fire on the close of that bar versus this one, which had no indications at the close of that bar. You see what I'm saying? So to me, this is more aggressive. This is more conservative, but they're both key reversals back in the direction of the trend. Okay? Let's take a look at another example because the market's littered with these. Okay? We know the trend is down, got that rapid fire price action going on. And then here we get a key reversal down again. Okay, right there. Now, same situation as this one. High is higher than the previous high. Let me get the thing on here. The high is higher than the previous high, but the close is below the previous close. That's a trading key reversal down in the direction of what we already know from looking at the examples all afternoon. The 5-minute and the hourly are to the downside. Okay, so trading key reversal down. Typically that closes on the exit of that bar. JJ, I'm sorry, I don't know what that means. Is there an extended fade with the key reversal down? Yeah, not really sure there. So now here, let's go ahead and go look again. Here we go. Right on up. There it is. High making a higher high than the previous bar. Close going down below. It's a trading key reversal down again. Same situation, different bar. Okay, to the downside. The key is, are my indicators firing off with a preponderance of the evidence to the downside on both the current time frame and, if you can get it, the higher time frame? Okay, if you get that higher time frame agreeing with the lower time frame, all you're going to do is increase your effectiveness. Okay, Nick asks, are the key reversals down more effective than key reversals up? Well, Nick, remember, in my mind, to a degree, the short answer is yes. Because remember what I was telling you about there earlier, my friend? I was telling you that, and the beauty is, I'm going to see you in 2 weeks in the United Kingdom there. So we're going to be able to talk about this even more there. So I'm glad. So anything that you learn here, we're going to be able to continue that learning live and in person when I see you in just a few weeks. But the what I see is the downside just generally tends to happen quicker. People are quicker to sell off because junior traders panic out of their trades. Most traders, it's amazing to me how many traders only take long side positions. There are so many traders that don't even know how to go ahead and take short side positions. So I think more of the junior traders are caught in long side trades, and then, of course, they very quickly panic out accordingly. Now, so in other words, I think that the key reversals down are a little bit more effective, where I can make wider range amounts of money quicker than the long side. But make no mistake about it, okay? Long side trades, exist as well. Let's just go ahead and line the hourly charts back up with the dailies. So let's go ahead and go look at the hourlies. Oops, that's the daily. Okay, we know that back on the 7th, we had uptrend. Let's go take a look at the last day. We had some decent, trending to the upside. That would have been back on the 1st and the 2nd. I think everybody would agree with that. Back on the 1st and the 2nd was the last time we had good trending on the hourly charts there. So let's go back and take a look at those. Just takes a moment for the data to go ahead and load up. But good questions, and I think the best way to go ahead and address those is, prove them out live in real time there. Okay, so we talked about the 1st and the 2nd. Well, let's just start with the 2nd here. All right. So as we look, okay, right here is a key reversal up. Okay. See how the low is lower than the previous bar, and the close is above the close and the high. This is a full-blown key reversal up on this bar right here. Okay. And we already know, we saw from the hourly charts, we had great tone in the background. And then, of course, now as we look at this, we've had tone in the background, tone and lock on the 5-minute chart, okay, in the background here. And then we went ahead and had a full-blown key reversal up right here. All right. Now, let's go ahead and see if we can see any other examples. All right. Here is a key reversal up again. Here, the low made a lower low than the previous low, and the close is above the previous close. Not a full-blown key reversal up, but it's a trading key reversal up. Okay. Now here, then you can see this superhuman. Well, actually, I'm sorry. There's 2 key reversals up here. Right here, once again, you see the low making a lower low, and the whole time you can see I got beautiful tone and lock. And so they were too far back to go ahead and have the blue bars show up, unfortunately. But we definitely have tone and lock here. I believe we have rapid fire as well, from what I can see. At that time we would have. But right now we've got the tone and lock clearly on these bars on the 5-minute. We already know we had tone and lock on the hourly chart. Okay, so then this bar makes a lower low than this bar, only to turn around and close up right here above the previous close. Then the next bar does it again. Okay, now I think there was economic data here because this is 7:30 Central Time. But this bar then makes a lower low than that key reversal down, and then engulfs that key reversal up. Excuse me, I meant key reversal up. This is a key reversal up, and then you had an even bigger key reversal up engulfing the first key reversal up. And then, of course, we could see that bar shot up from the $25.80 up to above the $26.10 level. So about 30 more ticks on that next 5-minute bar. All right. Now, again, economic data here, but nonetheless, you can see the key reversals. Okay. So let's just, now I tell you what, let's just go ahead and take a look one more time. Let's go back to the first, and then we'll go ahead and we'll take a quick break there. Okay. I told you we were going to have an intense day. I spent all weekend, getting together some of the thoughts that I wanted to discuss. But all right, so as we go ahead and look here, we know on the first, like I said, we had the long side ones. So I just kind of wanted to share these with you real quick, and then we'll go ahead and we'll take another break. All right, so right here is a key reversal down. It's a full-blown, key reversal up. It's a full-blown key reversal up. Low made a slightly lower low than the previous bar. The close was above the close and the high of the previous bar. Key reversal up. Okay. And then, of course, you saw what happened. Sorry if you guys didn't see what happened there. It pushed up from there. Now, then we went ahead, saw another one here. Here's another one right here. Okay. The low made a lower low than the previous low, and the close was above the close and the high of the previous bar. Okay. Here, same thing. The low was below the low. These are all, you see all the tone and lock in the background. You already saw it on the hourly chart. And so now you can go ahead and see it continuing on here. Oh, you're very welcome, Miles. The low is lower than the low of the previous bar, and then the close is above the close of the previous bar, but not above the high, so it's a trading key reversal up. Okay, but then that led to, a bigger movement here. See, so it's important to understand having the tone and the lock and the direction, is kind of vital to this. All right, so there we saw some more examples. I just wanted to go ahead, and then here we saw it again, key reversal up one more time, and then of course that led into the 9 o'clock news announcement where it spiked up before pulling back. So and then we've got it right here again, key reversal up. This is a full-blown key reversal up. So hopefully that gives you guys some examples to work with. Lots of tone and lock, as you can see, all over the place, both on the 5-minute, and then we know we had it on the hourly chart. And that goes ahead, as you can see, leads to some high probability opportunities. Okay, so with that said, what we'll do is go ahead and take ourselves a little break here again. I'm I'm keeping you guys at it here. That was about another hour and a half plus. And so why don't we go ahead and we'll take a break here until about 4:15 Eastern time. So about 7 minutes here. And then we'll go ahead and get right back to it. Good, Nick. I'm glad you're loving it there. So let's just go ahead and take a break, and then we'll come back and pick it up from there, gang. So great. Well, thank you very much for the nice comments there too, gang. I appreciate that. It's good to come back. Like I said, it looks like I was getting worried there. Everybody's asking me how much longer are we going and stuff like that. When you find out it's a couple hours, you're like, oh, cool. It's like, okay, great. So I'm like, if you want to end, I got lots of. Well, I can't repeat that out loud, but I'll say the last part of it. No, let's go. I can't say the rest of it, Tim. But great learning, great job. Good. I'm glad we're on the right track here, gang. Like I said, this is something I've been looking forward to sharing with you. That's why I spent literally my whole weekend, finalizing these things because I just think there's a lot. And like I said, the way I look at it, I'm investing in you because we've already seen it live pay off, where students have said, Rob, I think one of your setups is over here. And you've watched me then go up, like, yep, that's one of them. I'm going to take the trade. So we've already seen live many, many times the room giving back to the room and to me. And so this is the next evolution in that to get people more up to speed on these things. And so, things like that, those key reversals, I'm glad that Joseph was excited to learn more about those because it looked like Nella then picked up on some neat things with those as well. And there's so many of you here, so I think that there's a really great opportunity for, people to build upon this and then give back to the room because everybody's going to be looking at these things because there's a large number of you here that, are part of the trading room. So that's awesome. So we're just going to keep pulling at that thread. Now let's see here. I had a couple questions I wanted to follow up on. Looks like that while we were at the break, and let's see. So David M from Australia there asks, is there an amount that the key reversal should exceed previous bar, i.e., is one tick sufficient? Yes, excellent question, Dave. Even one question or the real key for the trading key reversal, the real key there, no pun intended, David, is that the close has to be beyond the previous close. So even if that's by one tick, that qualifies. Okay. So good question there, David. And yes, even one tick does qualify as a key reversal. Okay. And then the next one is Joseph says, is it the body of the bar that needs to be taken out the high or low for key reversal, not just the wick? For the trading key reversal, Joseph, it's the body. For the full-blown key reversal, it would include the wick. The wick of the previous bar should be taken out as well. Okay. Yeah, thanks, Lance. I'll check into that and take a look before I share that with everybody. So that goes ahead and is a couple of those thoughts. Now, is there a junior and senior indicator setup in the charts? Well, there is, really. If let's go ahead and get our charts back to neutral here. If the hourlies, if the 5 minutes and the 15 minutes are on buy signals, let's say, they're showing long sides. Okay. But the 30 minutes and the hourlies don't have the same tone and or tone and lock, so they're not agreeing on those higher time frames, that's a problem. So as we go forward here, all right, here's a great example. Right now, we've got some tone and lock in various spots here and there, even within this choppy day on the euro. We also have a small degree of tone in the background on the 30-minute chart. But look, we're missing it in the 60. If I only got tone or tone and lock and fire on the 5 and or the 15, maybe the 30, but it's missing in the hourly, that would be kind of more of a junior indicator type setup. Okay. If I want to go ahead and play with the big boys and girls, so to speak, and I want to go ahead and have more confidence that I'm really on the right side of this thing, I'm really going to want to focus on getting some more go-go juice out of that hourly chart as well. Okay, so I would consider a trade that does not include the hourly chart, does not have underlying tone in my favor on that hourly chart, as being a little bit more of a junior trend, comparatively speaking, to the more senior if I got the hourly along with the lower time frames. Okay, so it's kind of, as we're talking about higher probability or lower probability, I would much rather go ahead and be trading in conjunction with the higher time frames, meaning the hourly in particular, in my favor. Okay, so if you're the kind of person where you're looking for the most conservative trade entries, I would always want to be focusing on that hourly chart as part of my repertoire. Now, where have you heard that before? As you know, for all of you that have been with me, unless you've been here only for maybe a couple of days, you know how important that hourly chart is to me anyways. So now all we've done is just added another layer of opportunity of verification by adding in my indicators on the hourly chart to see if they are agreeing with what the hourly, our perceptions of the hourly trend are. Okay, so we may perceive the hourly to be up. It's interesting. Sometimes I go ahead and I ask people, I say, you remember, how I like to play the game up, down, or sideways? Do you think the trend is up, down, or sideways? It's amazing how many people who will say this is a full-blown uptrend. Why? Because the last few bars are up, physically, bar over bar. And yet, all we're doing is coming into the backdrop of a downtrend. Okay, so but now as we look here, what do we actually have? Well, we can see here that in actuality, we're starting to see the tone dry up here a little bit. Okay. No high probability setup, and sure enough, that's confirmed then as we look down here, look very closely, sideways trading activity. So there's multiple ways to skin the same cat, nothing against cats, but to go ahead and get to the same result. Okay. So, hey, Michael, glad you were able to go and come in. Michael, just so you know there, you did miss a lot of the different subjects from earlier, but I know you had, of course, surgery and everything that you had to take care of for your patients. We did discuss, we've been doing this now for a little over 3 hours, and but that's okay. 12 surgeries. Wow. Congratulations. That's quite a marathon. But the good news is, of course, I've got it recorded for you, Michael, so you'll be in good shape, okay? So basically what we've just covered so far, in fact, I didn't do this at the last break, but let's go ahead and do that now. And let's also include the stuff that we talked about before the first break as well, gang. What are some of the key things as takeaways from today's session, both the first part and the second part, that you can recall that will help you now and things you're going to focus on as we go into tomorrow and beyond? Because we got a lot of great trading coming up the second half of this year. I told you the first half of 2010 I expected to be great, and boy was it ever. I'm expecting the second half to be just as good. So what are a couple of the things that you're going to go ahead and focus on now, takeaways from today's session that you're going to apply as we go forward here? What can you guys come up with?